Dear viewers, the chemical and specialty chemical stocks in the last 1 year have been on a downtrend. Increase in the raw material prices, rising fuel and freight costs, demand moderation, especially in export markets due to geopolitical issues, and inventory buildups are some of the reasons weighing over the specialty chemical stocks. However, in my view, these are short-term disruptions. The chemical industry in India is one of the biggest beneficiaries of China Plus One, and its long-term story, especially for niche market leaders, remains intact. Since the scope of chemical industry is vast and cannot be covered in a single video, today I am going to focus on a niche segment in specialty chemical industry of aliphatic amines and on two domestic players, Balaji Amines and Alkyl Amines, that are the leaders in this segment. Let us first understand what aliphatic amines are. Without going into technical details, aliphatic amines and their derivatives are used as solvents in pesticides and animal feed additives. In terms of end applications, 61% of aliphatic amines and derivatives get consumed in the pharma segment and 26% in the agrochem. These products also find applications in paints, water chemicals, rubber chemicals, and so on. What is special about aliphatic amines is that it is an oligopolistic industry, that is, there are only a few players or producers catering to a specific region. One of the key reasons is hazardous nature of the products and the need for safe handling with proper protocols and controls. End users also prefer to work with local 2 or 3 credible suppliers for these reasons that can offer quality and timely supplies, scalability, and low cost production. The entry barriers are high as it is capital intensive industry with fixed asset turn ratio of 1.5 to 2 times, expensive transportation costs, high technical expertise and approvals required. The key raw materials are ammonia, methanol and denatured ethyl alcohol, and these are mainly crude derivatives. The size of the global aliphatic industry is $5 billion or rupees 400 billion, and it is expected to grow at a CAGR of 5% to 7%. Again, this is not big enough market for new players to enter, especially when there are already well-settled, vertically and horizontally integrated players present. China is the largest producer and consumer of aliphatic amines, accounting for 60% of the global production. In terms of export potential, Europe is the biggest market with 45% to 55% share, followed by the US and Japan. The key risks for aliphatic amine industry players include volatility in the prices of raw materials and end products, slowdown in the end industries, especially pharma and agrochem, and competitive pressures. Coming to the most prominent domestic players in the aliphatic amines industry, Balaji Amines is the largest maker of aliphatic amines in India and derives almost 26% of revenue from it, while the remaining share comes from specialty chemicals and amine derivatives. The end industries include pharma, agrochem, refineries, water treatment chemicals, rubber electronics, dye stuff and paints, animal feed, photographic chemicals, leather processing chemicals, and so on. Around 15% of revenue for Balaji Amines comes from export markets. The company has been in existence since 1988. As such, the management team comes with a strong experience. Balaji Amines has 55% stake in Specialty Chemicals, which is based in Solapur, Maharashtra, and started production in FY20. Balaji Specialty Chemicals is planning to raise a 2.5 billion IPO along with an offer for sale by the promoters and selling shareholders. At peak utilization, the revenue of Balaji Specialty Chemicals is expected up to rupees 5 billion, which is 22% of Balaji Amines revenue in FY22. Balaji Amines has completed phase 1 of the capex and plans to invest rupees 3 to 3.5 billion more by FY25. With the proposed investments, the installed capacity is expected to increase from 2,31,000 to 3,46,000, that is by almost 50%. The company has set up capacities and is now the sole manufacturer of DMC and PC or propylene carbonate in India. These products were earlier imported in the country and find use in the pharma industry in production of polycarbonate, which is high-strength polymer, and in lithium batteries. As such, the company could be a big beneficiary from the rise of EVs. The company boasts of a strong forward and backward integration in the business. Balaji Amines in the past had entered some unrelated businesses such as hotel and CFL lamps that are more of legacy businesses and are not the focus areas for the management. The investment in the hotel was 1.1 billion in 2013. The company has tied up with Sarovar Group for management of this hotel on management fee plus revenue share model basis. Coming to the guidance, the management expects revenue of Rs 40 billion by FY 25-26 versus 23 billion in FY 22. The margin guidance is at 24 to 26% versus 27.5% in FY 22. The stock is trading at a trailing 12 months PE or price to earnings multiple of 18 times versus a 5-year median PE of 19 times. Let us now take a look at Alkyl Amines. On the slide, I've placed it next to Balaji Amines for an easy comparison. The company was set up in 1979 and is present in the same segments as Balaji Amines, catering to similar industries. With regards to expansion, Alkyl Amines is investing Rs 4 billion to increase the capacity of aliphatic amines and expects it to be added in the second half of the current year. Both the companies have witnessed stock price correction over last year due to dull performance in the domestic pharma segment, along with volatile raw material prices due to crude price vagaries, high energy of fuel prices, inflationary pressures, crisis in Europe due to geopolitical situation, and supply issues with China during the COVID. Do note that for alkyl amines, the exports account for 17% of the revenue. Now, alkyl amines will be adding new products to cater to pharma and agrochem. These products will be substitutes for imports. The management's focus is on products where the competition is limited to maximum 1 or 2 players, and it aims to be one of the top 3 in the new products it enters. Now, these new products are expected to add Rs 6 to 8 billion to the top line over next 3 to 4 years. This compares to Rs 15.4 billion of the revenue base in FY22. In its latest earnings call, the management of aliphatic amines has reiterated a long-term CAGR growth target of 10 to 15% for its volumes. However, this growth guidance for volumes cannot be translated into revenues because there is another factor of price realizations which is difficult to predict. Do note that of 25% growth in the top line for alkyl amines in FY22, almost 70% was due to price hikes. I have found the management of alkyl amines a bit guarded on disclosing too much information. They avoid sharing new product details and volume details. While this is not a negative, as the intention could be to avoid competition, it makes the business a little less transparent for potential investors. While the slide itself is self-explanatory, I would like to highlight a few points. Alkyl amines has a much lower and tighter working capital cycle at almost 0 days for FY22 as compared to Balaji Amines where the working capital cycle is 59 days. A lower working capital cycle is better for the business, as such alkyl ranks better on this metric. The difference is high because alkyl amines has higher payable days, that is the time it takes to pay back its vendors for the sales that it makes. Alkyl amines dividend payout is also much better than Balaji Amines. While Balaji has done better on parameters like return on equity and return on capital employed for FY22 on a 5-year average basis, Alkyl Amines has offered better returns. And then there are some more points to note which are not captured in the financials. The R&D expense for FY22 for Alkyl Amines is much higher than Balaji Amines. Alkyl Amines' total expense for R&D in FY22 stood at Rs 5.8 crores as compared to 56 lakhs for Balaji Amines. The remuneration of directors in Balaji Amines stands at 11% of net profit, which is lower than 14% for Alkyl Amines. Alkyl Amines has 72% promoter stake as compared to 53.7% promoter stake in Balaji Amines. But then, in last 1 year, Alkyl Amines stock has seen promoters selling the stock in the open markets. On the other hand, the stock of Balaji Amines has witnessed insider buying in the current year. But the most interesting difference point to highlight is the valuation gap between the two. Alkyl Amines trades at a current PE or price to earnings multiple of 53 times at a significant premium to its 5-year median of 23 times. Balaji Amines is available at a PE much lower of 18 times, close to a 5-year median PE of 19 times. On a 5-year median basis, Alkyl has always traded at a premium to Balaji Amines. Alkyl Amines has traded at a long-term PE of 23 times versus 19 times PE for Balaji. But in the last 2 years, the gap has widened significantly. Now, without implying a buy or sell view on any of these two stocks, in my view, the premium valuation that Alkyl Amines is commanding over Balaji Amines is not justified. Whether you agree or disagree with me, let me know in the comment section. With this, I've come to the end of the video. Do press the like button if you found the video useful. In any case, I would appreciate your feedback in the comment section. For more such investing updates and alerts for future videos, subscribe to Equity Master YouTube channel. Thank you for watching. Goodbye.